Thank you, Tom, for joining us. Please walk us through the global economic outlook in 2023 following a year bothered by the geopolitical tensions, the ongoing pandemic, and the largest synchronized monetary tightening in more than 30 years.
In 2022, the global economy faced a number of significant shocks. There was the shock from high inflation and tighter monetary policy, especially from the Federal Reserve. There was the shock from Russia's invasion of Ukraine and everything which that meant for global energy prices. And of course, the shock of the pandemic, especially in the second quarter of the year. For the global economy in 2023, the aftershocks from those three big events are going to be some of the big factors shaping the outlook and basically zero growth for the year as a whole. If you put those pieces together, we think global growth next year comes in at just 2.3%, down from 3.2% this year, and one of the slowest paces of growth in a non-crisis year since the early 1990s.
What is your expectation for China economy in a year ahead?
We're hopeful China will manage a smooth exit from COVID zero and also succeed in controlling the slide in the property sector. That will deliver a significant boost to Chinese growth, add significantly demand for global commodity prices. The rest of the world will benefit from stronger Chinese demand.
How does China affect the world economy under the new normal?
So for much of the last 30 years, China has been a really significant contributor to global growth. In the years ahead, China will continue to be a big contributor to global growth. However, China now is facing some significant economic challenges of its own. Demographics have become more challenging with the working age population shrinking. There's a problem of high debt and overcapacity in industry. A world economy which has become familiar with a China growing at first 10% and then 8% and then 6% a year will, in the years ahead, I think, have to get used to a Chinese economy which grows at a more modest pace. If we think about the history of China's economy, there have been a number of points where Western commentators and Western economists have said this is a crisis. The Asian financial crisis in 1997, moment in the early 2000s where the banking sector had to be recapitalized, the moment in 2015 where PBOC devalued China's currency. There have been a number of moments over the past decades where there's been kind of too much pessimism on China. And Western economists have said, this is the end. And that pessimism has always proved to be wrong.
Is dollar peak in sight or there's more room to go?
Markets are forward-looking, right? And the markets have already priced in, essentially, a terminal Fed funds rate of 5%. We think that's the correct market pricing. Assuming that's already priced in to the exchange rate, we would need a surprise in one direction or the other on Fed policy or on monetary policy in other major countries like the Euro area, or China or Japan in order to change the dynamic for the dollar.
Could you elaborate more on the trends which will shape the world in the decades ahead and who will be the potential beneficiaries?
I think one really important trend which is going to shape the world economy in the years ahead is the growing tension. My view is that tensions are probably not going to go away, and they could get worse in the years ahead. As tensions increase, I think there's more scope for barriers to trade, barriers to capital flows, barriers to technology transfer. It's bad news for the global economy as a whole. It could mean some new winners emerge. Countries in Eastern Europe, countries in South Asia, countries in Latin America could potentially benefit as the trend towards nearshoring or friendshoring continues.
What is your suggestions for the investors at this point?
Antoine, safety is the first priority. Or maybe just to expand on that a tiny bit, the world in the year ahead is going to be highly uncertain. We don't know how high the Fed has to go or what impact that has on the global economy and markets. We don't know how the war in Ukraine will evolve and what that means for Europe's economy. It will pay for global investors to be nimble and to be able to respond quickly to changing circumstances.